Hi, I'm Wei Min, and this is our July market update. The opening slide here is an example of a tree-lined apartment. What that means is that if you're on the second, third, or fourth floor of a building facing outside, and if there are trees in front of the windows, then you have a tree-lined apartment. Because when you look out in spring, summer, and also fall, you're going to see leaves. And in the fall, you see yellow or orange leaves, which is also very nice. So this is one of the desirable types of views. Sometimes people like high floor water views, sometimes just really high floor views, and tree-line views is one of the desirable attributes as well. Let's move on. The July Manhattan property market update. These are the three key points: record median sales price and highest rents ever. That's number one. Number two is that we are moving away from being a complete seller's market. And the third point here is there's opportunity in completed new developments. So what do all these mean? Let's move on to the next slide. These are the second quarter numbers, and the median sales price here, 1.882 million, is the highest ever recorded. The price per square foot is still not as high as 2017, but the median price is the highest ever. And you can see here it's a 14% increase compared to a year ago. Number of sales is still, or was still up. It was up 9.4%. And we had a jump in the supply. It went up by 18% compared to the prior quarter. But supply is still low. So overall, the median prices are at record levels and the rents are at record levels. However, for the sale market, the sale volume is slowing down because of high inflation, which is leading to high interest rates, and we are going to see in one of the next graphs. So the sale transactions is slowing down a lot, especially in the sub $2 million segment. This is the supply chart, and you can see supply, it went up a bit in May and June, and right now it's coming down again. And why is it? It's because right now we're in the summer months. So summer is a slow season because here in Manhattan, a lot of people would take summer vacations. So maybe a lot of sellers would delay their sale until the fall when the market picks up again. But low supply is one of the key challenges with the sale market right now. So we are moving away from a seller's market. You can see the line here, it's moving towards neutral. Neutral is the gray band in the middle. The top section here represents a seller's market, the middle represents neutral, and the bottom here represents a buyer's market. And about 6 months ago, we were really high, so it was a total seller's market, but it's been coming down. Why? It's because the mortgage rates have roughly doubled compared to a year ago. So buyers who need financing, and 50% of buyers here in Manhattan need financing. And it's making it a lot more expensive for buyers needing financing, and that is another reason why the rental market is the hottest it's ever been. So the rents for June was a record. The average rental price was more than $5,000, and that was like a 29% increase compared to a year ago. So this chart is showing that we are moving away from a seller's market and towards a neutral market. This is the interest rate chart, and you can see, well, it's a historical chart. It goes back to 1972, and in the 80s it was really high. It was around 17%, and we were in a low interest rate environment for a while. And you can see here in 2021 it was roughly around 3%, and right now the latest data point that we have for 2022, it's about 6%. So it doubled, which is making it a lot more expensive for buyers who are needing financing. That's why the sale market has slowed down a lot, and there's the sub $2 million segment, which refers to the studios and the one bedrooms, and that is much slower relative to the the 2 bedrooms and up, which is the 2 million and up segment. And that segment is still experiencing low inventory, and for sellers that have good property or good unit, they are still seeing multiple offers and so forth. This is our new development table that shows that the number of sales for new developments increased by 27% compared to last quarter and double compared to last year. Why is that? It's because developers are still offering concessions. Concessions refers to developers taking up part of the closing costs. So developers know that the market is slowing down, and number one, there's concessions, and I think for buyers who are in a position to close all cash, this is a great opportunity because they can get concessions from developers, still get a brand new property, buying brand new from a developer, and if the buyer is intending to rent out as an investment, the buyer can take advantage of the record high rents. Right now, there's just almost no rental inventory, so good units are snapped up in a day. And that's the reason for showing this new development table, to show that the sales are strong. And my point is that there's an opportunity to capitalize on new developments that are completed. Okay, they have to be completed so that they can close in 30 or 45 days. Not new developments where you have to wait 1 or 2 years for completion because you don't know where the rental market is going to be then. This is a brief bio of myself, and thank you for watching.